Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning. Welcome to Bazaar Morning Call. I'm Lata, and with me are, as always, Anuj and Sonia. Well, Sonia, I must say that this is a daring color to wear today. This is quite clearly a global crisis engendered by the Turkish Lira collapsing. Now, before we call it a global crisis, just a word on what we are faced with. Turkish Lira fell 18% just on Friday. And importantly, from July 24th, it has fallen 40%. Now, I'll tell you why July 24th becomes important. July 10th, I think, was when Erdogan was sworn in, the new president. And since then, he has assumed large powers over the Turkish economy. One, he has appointed his son-in-law as the economy czar, something like an overseer of the economy. And most importantly, he has written into himself powers to appoint the central bank and everybody who sets the interest rate. And then when the central bank met on July 24th, that's the important date, it did not raise rates, although inflation is running at 15.5% CPI in Turkey itself. So this was a crisis that was waiting to happen. The lira went on falling as the central bank's independence got denuded. And the last straw came when US imposed tariffs on Turkish metals. But with or without the US tariffs, this was a crisis waiting to happen because the rate-setting authority of the central bank was taken over by the government authorities. Now the point is India is in the exact opposite camp. We have an extremely independent rate-setting authority, and while the central government always makes noises about taking away the autonomy of the central bank, extracting a high dividend from them, trying to appoint board members who are sympathetic, while they may do all this, it is a fact that the MPC is extremely independent. It is seen as independent more than anything else. And therefore, my sense is today, while with all currencies, we will also, see some red. In fact, we saw some red on Friday itself. We went to 69.10. Chances are that because India's monetary policy is extremely independently run, despite our current account deficit, we may be spared the blushes. The RBI may come and intervene if the volatility is too much. My own sense is this should not be a bloodbath for us and for all emerging markets, but it's just a guess at this point.
Well, for now, at least, a lot of the Asian markets are under pressure. I mean, the SGX Nifty is down as well. I take your point about the crack in the Turkish Lira. That was the big headline. But the other emerging market currencies have also been under a lot of pressure. I mean, you've seen the Argentinian peso hit a new low. It was down about 4%. You've seen the Russian ruble hit a fresh low as well. So across the board, there's been a lot of pressure there. For our own markets, too, we saw some selling from FIIs on Friday, about 511 odd crores. Crude has gone back up a tad bit, and not too much of a worry, but a tad bit higher. So yes, the global setup is not looking that good, and the FI flows, as you can see, now moved into the red. Anuj, morning. Generally, in hindsight, these kind of events are great buying opportunities for Indian investors, and we haven't had a good buying opportunity or a great dip in a while. You think this could be that opportunity for at least long-term players?
Morning, Sonia. Morning, Lata. For starters, we know where Lata is planning her next holiday, right? Turkish Lira.
I went to Turkey. I couldn't see all of it. It was only 1 week holiday.
Plan maybe
You think
one
she hasn't
more.
been there already?
So, no, that's what
I'm saying. I was.
Maybe another one there.
I don't mind going if I can afford it to go to Turkey
the long
every
weekend
year.
is coming. Sonia normally has a habit of, going to all these
It's not a
places.
long weekend. It's just a midweek
you can take 2
holiday.
days off. Right? Anyway, so look, the point here is the global setup is murky this morning. You have to buy the dip, but what kind of dip? Could this be that 200-point dip? I think that's something that we'll find out. Yes, in hindsight, of course, we'll know that this perhaps was a buying opportunity. But from a near-term point of view, the buy on dips thesis will be tested. Normally, what happens on days like today is that there's a dip, as the SGX Nifty is indicating. You start with a gap down. That first gap down at some point normally gets bought. But then there's a second dip, which is where the stronger selling comes in. And that is the case if the markets that we're seeing like Hang Seng continue to, seek lower ground. In that case, there could be a bit of a second dip. I think the trade that could play out today is the corporate banks rally. That might be, showing some signs of halt. And retail banks saw some sharp spike towards the end on Friday, so that there could be a bit of a reversal. The Nifty's rally is intact as long as the last low is not broken. The last low was 11,245. As long as you make a higher low, you're fine. So 11,245 for me is also the rising 20-day moving average. Also, the other thing which will work for India is that IT may bounce back. It already saw that on Friday also. We spoke about it. It bounced back from 20-day moving average. Currency clearly is going to be a bit of a tailwind for IT. So that way, perhaps stocks like TCS, Infosys may do well. Even Reliance may do well. So at lower level, obviously, there will be some support point for the market, and it's a strong market, so obviously at lower level there would be some buying, but because the run especially in the corporate banks has been just one way, that's one pocket where because of the global weakness and all, you might see some kind of profit taking today, and should not be in a hurry to just straight away buy the first day, because as I said, on days like today, you normally see a bit of a second dip as well.
No, actually, the Chinese yuan, even the central bank has placed the midpoint at 6.86. And it's now trading at 6.87, or is it 88? 87, yes. So, what this normally implies is that yields go up. And therefore, today, I don't think even the private sector banks will be spared. Today, just as, a few days back, it was a pro-bank Nifty day. I mean, it was pro-banks because the currency was strong and the yields had fallen. Today, it's the exact opposite. Today, there will be pressure on the Nifty bank. And of course, corporate banks will be more under pressure, perhaps, because they had seen that rally. But today is not an interest rate sensitive positive day. Yeah. It's an interest rate sensitive negative day. And because one would expect the currency to be under pressure, I guess the relative safe haven, the relative outperformer, that tech stocks will also fall if there is a general fall, but it will definitely be the relative outperformer.
Okay, for now, most global markets have been under pressure. The Dow also lost about 200 points after the Turkish news came out. But let's take a look at what our wise experts have to say as we head into trade this Monday morning. Jonathan Garner of Morgan Stanley says the dollar index last week touched 95.5 levels, making a new high for the cycle. He says in recent weeks, upwards revisions to U.S. growth numbers and to the expected path of Fed hiking cycle have taken place, including from their own economists. He thinks this keeps the pressure on Asia, Pacific, ex-Japan, emerging market equities, which experienced a counter-trend modest recovery in July. Jonathan says India, on which Morgan Stanley is overweight, is a rare bright spot where GDP and earnings growth acceleration is underway, and the RBI has preempted a more aggressive Fed cycle by hiking rates earlier than the market had expected.
Okay, well, just to add to that, the IIP numbers came in on Friday. Not the best of growth indicators ever, but it was a great number. It was 7%. Of course, there was a low base effect, but despite the low base, the expectation was for a 6% IIP. So 7% was a damn good number, and capital goods and consumer durables led the rest. Okay, money market views on that note. Pramit Brahmabhat of Veracity says on the back of higher crude prices and stronger dollar, more stronger dollar than crude, the rupee is going to trade with a negative bias. He expects the spot USD INR pair to trade in a range of 68.50, 69 for the day. I don't think it'll stop at 69. I'm sure it's going to see a 69.10 at least. That's where the central bank came last time. So maybe support will come there or thereafter.
Okay, what about the bond markets and how are they placed this morning? Ajay Magnolia of Edelweiss says that the bond markets will look forward to CPI inflation that will be released post-market hours for cues after a range-bound week of trading. He says the bias might be positive, but overall participation will be subdued. He says the 10-year benchmark bond yield is likely to trade in a range of 7.72 to 7.77% today.
Okay, well, the world, of course, is the most important thing. Global cues is the most important thing we have to watch out for. Asian markets are taking a knock in early trade, and the US also, of course, ended low as geopolitical concerns pushed the Turkish Lira to a record low against the dollar. Like we've been saying, the Lira plunged at 1.20% on Friday after President Trump authorized the doubling of metal tariffs on Turkey. Turkish President Recep Erdogan has remained defiant, reportedly lashing out against the United States and threatening to seek new alliances. Turkey's finance minister has promised that a plan to calm the markets will be unveiled on Monday morning.
Okay, let's see if the markets do get calmed. But for now, Adrian Mowat is with us. Adrian, good morning. You've seen many of these incidents play out in the past. How do you reckon emerging market investors should approach this news flow out of Turkey? A buying opportunity, or sort of just wait on the sidelines and see how things develop?
I think it is idiosyncratic to Turkey, and we shouldn't assume a contagion effect. I mean, you did obviously see this very large move in the Turkish lira. The move that occurred in, say, the Mexican peso was relatively modest. Now, the reason I would talk about the Mexican peso is it is one of the few emerging market currencies that is a deliverable forward. It's very easy to use as a hedging currency. And I think if we were going to see a sign that there was contagion risk, you typically see it through the Mexican peso. If we think about this year for emerging markets, there's been a lot of idiosyncratic factors at work and a very large dispersion of performance in EMs. And I'm intrigued, you made some comments about, is this a buying opportunity? Well, if I was to look for a buying opportunity, it probably wouldn't be in India because, let's face it, your markets have been very strong year to date, best performing large market in EM. If you look at it in local currency terms, the indices is almost at an all-time high. In dollars, yes, you've lost a little bit of money year to date, down about 1% for a dollar-based investor. But you compare that to EM, which is down nearly 10% for a dollar-based investor, or even the developed world ex the US, which is down about 3%. So India is a relatively stronger story, and the market has quite correctly been reflecting that. You highlighted the IP numbers, but the PMI numbers were also positive, an upgrade from the previous month. Jonathan Gardner was making some important points about the RBI being ahead of the curve. India has short-term cash rates of 6.25%, so a real interest rate relative to CPI. That, I think, also gives some relative protection for the Indian rupee. So hopefully what happens here is that India remains somewhat isolated from this. I think you're seeing some slightly more larger moves in markets like China. But remember that beyond a contagion effect from Turkey, we continue to have an escalating trade war between China and the United States.
Yeah. Good morning, Adrian. Actually, at the moment, as we speak, it's a sea of red on the Asian markets. Any index you pick is over 1% down. And likewise for currencies, the Indonesian rupiah is down 0.8%. That's the worst performing currency. And of course, the yuan, the midpoint itself was set at 6.86. So at the moment, it's trading 0.4 down. The peso, the ringgit, etc., are relatively better, down about 0.25%. For all the strength that you're speaking about, the independent central bank and the ahead-of-the-curve rate hike that they announced, the current account deficit in India is expected to touch about 2.6%. So there is a worry over there. And as you say, slightly probably overbought markets or overvalued markets. How much should we be prepared for? Can the rupee take a knock because it's a current account deficit country, or will we ignore this?
No, I think the rupee will probably experience some weakness. We had, if you look at the setting of the renminbi this morning, that was also weak. Sterling was very weak overnight, as was the Swedish krona. So I think the Indian rupee will weaken in this event, but it's likely to remain more resilient than other emerging market currencies, despite its current account deficit. But remember, its current account deficit is more modest than the Turkish current account deficit, and India is less vulnerable to short-term fundings than a market like Turkey or a market like Argentina, Brazil, etc.
Okay, then one final question. You said you would not look to buy India, or you would not look for buying opportunities in India now. What is your stand on India exactly? Are you underweight? Have you cut your positions? And, at what point would you look to buy the Indian market?
Well, so the premise was, should you buy into this correction? If you check where the Indian index is, it's pretty near its year high. So if I'm looking for a contrarian call, I'm much more likely to do that in a market, let's say like China, where most of the corporates that are listed aren't actually exposed to global trade. And perhaps there's a better opportunity because you have seen the corrections there. And I think also in Latin America, there may be a few markets that get drawn lower because of Turkey, and that's where your trading opportunities are. So just to be specific, India has not given you a correction opportunity yet. If it did, then I would be a buyer. But I think for now, the Indian markets had a very good rally in local currency terms. We've reported some decent economic data. It probably needs a little bit of a consolidation rather than being the market that leads a recovery from some of these Turkey fears.
Okay. Adrian Mowatt, always a pleasure having you with us. Thank you very much for joining in
Pleasure.
and putting that into perspective. So, yes, the problem with India would be that it's an expensive market, but not because it will be vulnerable on the macro front because of what's happening to the Turkish lira. Well, we'll have to see. At the moment, of course, there will be a bit of a vulnerability because of the way the Asian screen is, both currencies and equities. Now let's get domestic. And the biggest bank of the country announced numbers on Friday. It came during market hours, but of course, at that time, the market was in the grip of the Turkish fever as well. So banks got punished, the markets got punished, and State Bank of India got punished. The results otherwise were in line and at some points perhaps a little better than expectation. Rajneesh Kumar, Chairman of State Bank of India, joins us now. Good morning, Mr. Kumar. Thank you very much for joining us this morning. Well, the first question has to be unpleasant because it is about slippages. The worry was not about the quantum of slippages. At 14,000 crore, it was south of what most of us were expecting. But a large part of it has come from the non-watch list. That's a bit of a worry, isn't it?
No, I don't think it has come from non-watch list. Retail, we never put it in the watch list.
Yes.
And in the first quarter, normally, if you look at the historic trend, the retail NPAs are a bit elevated in the first quarter, and as we progressively move in the year, they start coming down.
And the agri?
Last year was 17,000 crores. Even agri is also elevated in the first quarter, but this year, because of the two geographies, Maharashtra and Karnataka, you see the elevated NPAs in agriculture sector. So I'm not as much worried about retail, and corporate all came out of the watch list.
Mr. Rajneesh Kumar, good morning. But, for the last 3 quarters, if you look at it, the slippages from the non-watch list have been quite elevated at 10,000 crores plus. And every quarter when we speak with you, you've been guiding for lower slippages, at least from the non-watch list category. Can you tell us over the next few quarters, on an average, what will the slippages be from the non-watch list category?
Watch list is only for corporate. And I have a portfolio of 20 lakh crores. So when I did the earnings call for the year ended March 18, our what was the guidance? The guidance was that it should not exceed 2%. So that means 40,000 crores, right?
Yeah.
I am telling you that we will be less than that.
Okay. Well, I wanted to ask you about the MSME and the SME sector. That they are in trouble, we know, because the Reserve Bank also on February gave a dispensation for not recognizing, giving 180 days to those who had paid GST. Then again in June, they extended that 180-day window to a larger number of companies, in fact, to all SMEs and MSMEs. Now, if it had not happened, how much would the NPAs have been? Union Bank gave some number for it.
Yeah, our number would be around 300 crore.
Oh, only that much? 300
Only
crore?
that much, yes.
Okay.
And SME, if you look at our NPA numbers, there is an improvement.
All right. Okay, now if you... Yeah, go ahead. Sorry.
No, I just want to move to loan growth because, the domestic loan growth has come in at just about 7% It's muted compared to what we've seen from your peers in the industry. And, SBI has no capital constraint. So the worry is, why is the loan growth not picking up at a time when the rest of the industry is picking up quite a bit? Are you not growing the book fearing that perhaps the asset quality may take a further hit? And what is the trajectory in terms of loan growth that we can expect?
Again, the 10%, that is what we had estimated for the year, and I don't see any problem in achieving that.
Okay.
And as far as our loan portfolio is concerned, we definitely have a plan where to grow, where not to grow. We did a lot of reorganization, the way we handle corporate credit. But going forward, you can expect better loan growth from the State Bank of India. Our retail growth is intact, and that is what the story is for most of the banks. Corporate credit is picking up definitely. And SBI, our base is very large. So in percentage terms, I can't grow at 20%. But 20% growth for me is 4 lakh crore in a year. And that would not be the total growth in this system. So for us to expect anything higher than 10 to 12%, it would be not a correct estimate. But 10% is definitely we are going to achieve.
Mr. Kumar, I take your point that Bank of Baroda, for instance, posted almost 20% loan growth. Your base is, maybe 3 times that theirs. But if you have to deliver 10% for the full year, then considering that you only delivered, a little over 4% in the current quarter.
No, 7.5%.
Okay, you're taking the domestic growth alone.
Right. Because international banking, the factors I explained about this, the bias credit which were against LOU.
Okay.
So we have lost 45,000 crore.
Okay. But will there be some impact of this in the subsequent quarters?
No.
Will there be such a big gap between overall growth and domestic?
So overall done now, IBG. There will be a growth in international banking book also.
Okay.
And 10,000 crore went to our UK subsidiary.
Okay.
So it is not reflected in SBI's performance.
Okay.
And IPG, our international banking book, should also grow. And domestic, of course, we are on track for that.
Okay, so when you're guiding 10%, are you guiding for the entire loan book or only for the domestic loan book?
No, entire.
Okay. No, in that case, you have to deliver something like 12% every quarter. Only then your average will come to 10%. That's why I asked.
So wait.
Isn't it? Okay.
Wait for some time.
All right. Okay, Mr. Rajesh Kumar, I also wanted to ask you about the power sector. What is the latest? Are we expecting the high-powered committee to deliver something different, or are we just waiting for the Allahabad court?
There are 2-3 different things are happening. One is the Allahabad High Court, which is examining the writ petition filed by the independent power producer about the resolution framework of 12th February of Reserve Bank of India. So that is one. Second is there is a committee which is looking into a specific port-based project in Gujarat. And third is the bank's efforts under Samadhan to resolve certain assets. And there is another committee which has now been formed under Cabinet Secretary. So which one you are asking?
No, I want to know what is the likelihood of any solution coming from any of these, or, the guidance that you are giving in slippages, does it include none of these, giving you any results at all? And the Reserve Bank circular kicking in on August 27th and taking most of the power companies into NCLT?
Power companies already 16 are there in NCLT.
Okay.
Out of 11 cases which we had identified for Samadhan, 4 of them or 3 of them are likely to lend in NCLT.
Okay.
And rest we are trying to work, all the lenders, not SBI alone, to resolve them as quickly as possible. And there is a process which has been followed for resolution. And there we are very quite advanced, and there is a consensus amongst lenders for most of these 7 assets, how to do and what to do.
And what is your exposure to these 7?
Our exposure is 17,000 crore.
Okay, and you're not including that when you are giving us a guidance of slippages under 2%?
No, slippage is power sector. In any case, most of these accounts are sitting in NPA.
Okay, fine.
So for the NCLT cases, there is a decline in the NCLT list 1 because of recoveries, but the list 2 remains the same. The provision coverage ratio, though, has gone up from Q4 to Q1 for list 2. Should we read that as the fact that you're expecting lower recoveries from the NCLT list 2?
Not exactly. One is that the aging provisions kick in.
Okay.
So because of the aging provisions also, there is an increase from 76% to 79%. And otherwise, I'm expecting that at least we should be able to recover on an average 30 to 35% in list 2. So there is excess provision in my view on NCLT 2. But because of the aging provision, that's how it comes to 79%.
And overall, is it fair to assume that the resolution cycle for the NCLT cases have improved compared to when we spoke earlier?
Yes. A lot of things are inside. Decisions are coming. 2 judgments came on Friday. Another one we are expecting this week. Some of the cases are at various stages of adjudication.
Okay.
So list 1 should mostly be out by 30th September.
Okay, and then you will get a lot of write-in. How much of a write-in are you expecting from that recovery?
The list 1 itself about 4,000 crore if it all goes well.
All right.
Okay. Yeah, just 2 quick questions if I can squeeze them in. Are you looking to list SBI MF at any point in time? I mean, in this calendar year, anything planned?
This year we are doing a small parcel sale for SBI General as a precursor to IPO next year. And cards and mutual fund are also on the agenda for the next year.
Okay, so agenda for the next year. And finally, being the biggest banker in the country, just wanted to quickly ask you, are you seeing any recovery in the corporate capex cycle at all?
Yes, there is investment in many sectors. Oil and gas is one. Renewable energy has always attracted investment attention. Road sector is another. But yes, largely driven by the government spending. So there are sectors, your LCV is doing well, your auto is doing well, cement is doing well, steel is doing well. So steel, there may be some brownfield expansion.
Yeah.
So that way, I think today things are much better. And when I speak to many of the people in the business, whether in SME or at the larger corporate level, I have not found any dissenting voice, but everybody in agreement that there is a much better prospect for the growth, and on the ground situation has improved considerably. Even yesterday I was in a meeting with quite a few SMEs, and everybody is, 2 things come out. One is that even on GST, now people are very positive and bullish and say that it is a good thing which has happened, apart from some logistics issues and this thing. So that way the signals from the ground are positive.
Okay, so therefore we should in the second quarter expect a double-digit loan growth by your arithmetic.
If not double digit, but maybe around 8%, because second half is where the real credit growth picks up. But there is a very big pipeline for the State Bank of India.
Fair enough. Thank you very much, Mr. Rajneesh Kumar, for joining us and giving us more colour on the numbers. That's an important statement coming from the chairman of State Bank of India. Probably close to double digits, 8% maybe loan growth in the current quarter, and second half they do well enough to get an average of 10% growth. We take a break. On that note, we are coming back with our entire research team and the top 10 list of stocks to watch.
Well, that was a very interesting chat we had with State Bank of India, but plenty of other stocks to look at this morning. The SGX Nifty is indicating that the start could be on the downside. Remember, the Turkish move has really spooked a lot of global markets, and it could take our markets down as well. But our research team is here to tell you the list of stocks to watch as we head into trade today. So let's welcome all of them. Anuj, what are you looking at today?
So, Sonia, there's going to be an interesting trade today in banks, I think. Of course, the base call is that today IT outperforms the banks. That, of course, will happen. But within banks, HDFC Bank is going to open down because of that news flow on Parishtok Thankar. ADR was down. But my sense is that at lower levels, that actually could see buying. And if you're shorting that on a gap down, there could be a bit of a risk. On the other hand, stocks like Axis, where we've seen a big rally already, there's a bit of a vulnerability right now. On Friday, there was big delivery selling on the way down as well. And corporate banks in general, my sense is that there was an indication that at least this leg of the run could be coming to an end. There might be a big rally left overall, but this leg might be at the risk of getting over. So that would be my first stock to watch. The other stock, of course, we've been talking about it for quite a long time, is Bata. Now, again, not a day call, but fresh all-time high on Friday with a 3.4 times jump in delivery volumes. Normally an indication of how strong the demand is on such stocks. So that would be, of course, a stock that perhaps you would want to look if there's overall weakness in the market.
Okay, fair point. Thanks for that. But I think let's just get away from results for a second. We have plenty of them coming. Mangalam, PVR's big acquisition.
That's right, Lata. PVR's big acquisition, they've acquired South-based SPI Cinemas for a total consideration of about 1,000 crores. That includes about 630 crores of cash, 200 crores of equity that they will issue, and 160 crores of debt that they will get on their books. It is a good acquisition primarily because SPI Cinemas is strong in South, has higher occupancy than PVR, has better margins than PVR, has 76 screens, and they will open 13 more screens in the next 12 months. So this makes an acquisition value of close to around 11.5 crore per screen. This compares with what PVR trades at right now. They're paying a little more, but then again, it is a good acquisition.
Okay, a good acquisition. Let's see how that one moves. It's been in the news for all the right and wrong reasons in the past. But let's talk about the oil and gas space now. IOC, MRPL came out with numbers post-market hours on Friday. Sonal will tell us.
Well, on the IOC front, Sonia, it was a good set of numbers that was mainly driven by higher inventory gains. Margins, they were a big beat, came in at 9.7% versus 9.4% sequentially versus a poll of 8%. Reported GRMs, they came in at $10.21 per barrel and core GRMs at $2.6 per barrel. That implies a huge inventory gain. Jefferies is positive. They have increased the target price to 195 from 190. MRPL, on the other hand, weak set of numbers sequentially. Profits were down 33% due to an exceptional loss, higher taxes, and also because of an exceptional expense. Core GRMs also declined sequentially and on a YOY basis. Back to you.
Okay, thanks a lot for that. And a bunch of pharma companies as well, and I would put even Thyrocare in that list. Ekta, tell us, how did the results look?
Well, I'll start with Glenmark. It was a sluggish set of numbers, but they have collaborated with the private equity firm True North on their orthopedic business. Plus, they have demerged the API business, so maybe there could be some resilience on account of that. Thyrocare and Focus, growth was not as much as anticipated. The street was estimating around 20-odd%. It came in at around 11-odd%. And lastly, Fortis will be in focus as the Delhi High Court has refused to stay the Fortis EGM, which in fact takes place today.
Okay, thanks for that. Three banks coming out with numbers post-market hours. Abhishek will give us the lowdown. Abhishek?
Well, Sonia, all banks have reported a bad set of numbers. Now, for Union Bank of India, slippages remain elevated at 4,650 crores. The gross NPA in absolute value increased by more than 3.3%. In ratio-wise, it was at 16% versus 15.7%. However, they reported a PAT or profit of 130 crores versus our poll of loss of 1,160 crores. Andhra Bank total net loss of 4,000 crores in 4 quarters. So the P&L remained very weak and I declined by 15%. Operating profit down 12%. Gross NPA in absolute value declined by 5%. Quarter on quarter, gross NPA ratio at 16.7 versus 17.1. Corporation Bank, 5th consecutive quarter of PBT losses totaling to 6,770 crores. Balance sheet shrinkage continued and gross NPA remains stable. Back to you.
Okay, Abhishek, thanks a lot for that. Sonal, what about other results?
Well, I'll start with DLF. Good bookings this quarter at around 600 crores. Company has also broken even in terms of cash flows. Also maintains the guidance of fresh sales of around 2,000 to 2,500 crores. However, Street might not like the fact that the net debt that has increased by around 750 crores sequentially. Talking about Sun TV, strong set of numbers driven by the IPL business, where the revenues grew by around 1.7 times on a YOY basis. Ad revenue growth came in at 20% and subscription revenue growth also came in at 15%. Lastly, India Cements profits were down 20%. This was despite the fact that the effective tax rate declined. Also, the finance costs have declined around 16% on a YOY basis. However, they have increased 2% sequentially. Let's see how the stock reacts to that. Back to you.
Okay, thanks for that. And two numbers that I'm watching. Coal India, the numbers were below what the street was estimating because of lower e-auction volumes this time around. The e-auction volumes fell almost 29% on a year-on-year basis. Jefferies says that the valuations though appear attractive, it's only the potential government stake sale which is the overhang, and they have a buy on the stock. The other one I'm looking at is Amara Raja Batteries. It was a mixed bag, but I expect red on the stock because the margins were under pressure. The margins were down 50 basis points year-on-year, coming in at 12.3%, and raw material costs as a percentage of sales have moved up to 71.5% versus 68.7% last quarter. So expect red over there. But many more results coming in from the infrastructure space. Anisha will tell us. Anisha.
Well, Sonia, I'll start with NBCC, where there's nothing to cheer in the numbers because the EBIT margin for the PMC business fell sharply and the profit only looks better because there was one big sale that came from the real estate business. So nothing to cheer in the numbers. Moving on to CG Power, wherein the standalone as well as consolidated core operations have improved, but the losses in the discontinued business continue, and that's the reason we are seeing a loss on the bottom line. But other than that, status quo when it comes to the sale, impending sale as well. So maybe a green tick on that one. Lastly, on NHPC, yes, the revenue and the profits declined, but that is something that the management had already told us to expect, so not a surprise there. Maybe a tad bit of green tick because the losses are still better than what we expected.
Okay, thanks for that. And Reliance Communications announced that it has signed an agreement with RelGeo to sell spectrum, Rima?
Yes, Lata, absolutely. And the positive in that is that at least reports suggest that now Arcom will be selling an additional 65 megahertz of spectrum to Jio, and this could be over and above in the 122 megahertz that it had agreed to sell in December. So Arcom selling more stake to Jio, that perhaps means more money coming in to Arcom and therefore the banks. The pricing has not been disclosed, but considering that this was an overhang or in the works for so many months now, the fact that finally this agreement has been concluded is a positive for Arcom and the banks.
Okay, thanks a lot for that. Here's a quick recap then of our top stocks to watch. Stocks with positive news flow: Bata, PVR, IOC, Fortis, SBI, PNB, NHPC, CG Power, DLF, Sun TV and India Cements. While stocks that could be under pressure or negative news flow rather: Axis Bank, MRPL, Coal India, Amara Raja, Union Bank, Andhra Bank, Corporation Bank, Thyrocare and NBCC. We'll take a quick break. On the other side, our technical experts will join in.